Got the adjustings down, right? And what you came out with the adjustings was right here. You had the adjusted trial balance. Then you pulled off your income statement and balance sheet. So the income statement were these accounts right here. You had the $43,350 in revenues and $10,875 in expenses, which gave you a net income of $33,475. We got that. Then we pulled our balance sheet over and found out it didn't balance, but the net income made it balance. So these were your income and your balance sheet, and you would do a statement of retained earnings, of equity, of owner's equity, and find out that you would add the net income to your capital and subtract your draw. Okay, so now we've got a peculiar problem here. Even though I've already done the statement of owner's equity, I've done the income statement, and I've done the balance sheet, my accounts still do not agree with those financials. According to this is what's in our general ledger right here. And this net income has not been recorded. The financials state what should be in there, but none of this has been recorded or journalized yet. And that's where the closings come into play. So just concentrate on that for right now. We need to close the revenue accounts and the expense accounts into a summary account to get this net income into your capital account. Remember I said there are two problems? One, the accounts no longer agree. Okay, my owner's equity should be at, I forget. We'll have to look at it. I don't have that paper. My should be at $65,975, and it's not. It's at $45,000. So I need to get that general ledger to agree with this, and that we use the closing accounts to do that. And those closings look like this, okay? So the first thing I want to do is I realize, wow, if I continue putting things into the ledger as they stand, I'm going to continue increasing this fees earned, and that's not going to be correct because I've already recorded the $43,350. So I need to make my income statements accounts all zero. And if I make them all zero, then what do I do with this net income? Isn't this net income need to be in the capital accounts? So that's where our closings come in. So let's kind of look at this, and let's see if I can increase this. Maybe I can't. You have revenue accounts of how much? Let's see, $44,350. So I want to close that account. And how do I close a revenue account? Well, it has a credit balance. So I guess I should make that fees earned. So I need to debit that for $44,350. Now we created a new account, and that new account is income summary, because we need to find a way to get that income right here into owner's equity. And this is how we're going to do it. So I'm going to credit the income summary account. And that gives this income summary a credit balance of $43,550. Okay, so that closes my revenue accounts. Now I want to look at the expense accounts. And I need to, and the expense accounts are going to come into the income summary. Now, my accounts total $10,875. Originally, or typically, you're going to debit each one of these. For the sake of simplicity, I have just set expenses. These have a debit balance. So to empty those and make them all zero, I need to credit them for $10,875. So my expense accounts are going to be credited for $10,875. This means the income summary will be debited for $10,875. Now, if I look at this and say, well, how much, now the next thing I have to do is empty out the income summary. And obviously, I could do a debit and a credit into owner's equity for each of those, and I would come out with the same thing. You are going to debit income summary because it has a credit balance down here. Here's the balance at this point of $33,475. That's our net income, isn't it? So we're going to debit the income summary for $33,475. And when I do that, that means there's zero here. The balance now is zero. So now we have a zero balance in fees, a zero balance in expenses, because I credited that, right? It had $10,875. I debited and credited that, so my balance in this one is zero. Now, the only thing I have left is the $12,500 here. And what do I do with that? Well, who needs that? What account needs that? Isn't it true that the capital account right here needs to be increased? This is how we get our net income into that owner's equity account, or capital account, as they call it. So that now gets credited for $33,475. That means this is a zero balance, right? This is a zero balance. Fees are a zero balance. And the owner's equity, yeah, I guess I better put that in here. Just a second. Let me see if I can create this for you so it makes sense, so you can see it. Copy. This is going to become capital account. And now, it did have a $45,000. We're adding $33,475. So it now has a balance of something. Let's see what our balance is. $78,475. Is that what that's supposed to be? Does anybody have do you remember on your balance sheet it should be $65,975. Well, I have one more thing that has to be zeroed out, and that's the draw account. And the draw account goes right into the capital account. So the draw account has a debit balance. I need to credit it. So my draw gets credited for $12,500, and my capital or equity account gets debited for $12,500. Now when I do that, what becomes my balance? Let's see if we get close to that number we need. is supposed to be 65,975. Now all of my accounts are closed out, and once we make these entries into the general ledger, my balance sheet will be correct, which is what we're going to do with the next one on post-close trial, the post-closing trial balance.